Hi there, this is Elvin from Dr. Wealth. Do you know there are 9 REIT ETFs traded on the Singapore Exchange? And the largest of them all by market capitalization is NikkoAM Trading Asia x Japan REIT ETF. This video is brought to you by NikkoAM, and I'm glad to present it because there are 5 benefits of this REIT ETF which you might not know. Number 1, simplify your REIT investments. REITs are a convenient way to get exposure to property investing. But a REIT investor would still need to consider factors such as capitalization rate, strength of sponsors, gearing ratios, debt maturity profile, weighted average lease expiry, and more when analyzing REITs. It can be daunting for an investor to learn and get good at selecting REITs. And this year, we have witnessed many REITs suffering from huge price declines, and this goes to show the risk of picking REITs. On the other hand, a REIT ETF typically tracks an index and helps investors diversify into a portfolio of REITs with just one investment. For example, we can look at NikkoAM Asia x Japan REIT ETF's top 10 holdings, and you can identify with the prominent and well-established REITs such as CapitaLand and Mapletree managed REITs. So instead of buying individual REITs, you can simplify by buying a basket of REITs via an ETF and letting the index decide on the constituents. Number 2, reputable manager and index. It is important to select an ETF managed by a reputable fund manager and the index it mirrors. The NikkoAM Trading Asia x Japan REIT ETF is managed by Nikko Asia Management Asia Limited in the Nikko Asset Management Group, or NikkoAM in short. A global asset manager that's headquartered in Japan with a history spanning more than 60 years and currently overseeing group assets totaling $219 billion US. He has a long track record and a huge fund size, assuring investors of his expertise and experience. The ETF is designed to replicate the performance of the FTSE EPRA NAREIT Asia x Japan REIT's 10% cap index. FTSE is renowned as one of the world's 3 major indexing companies, while EPRA and NAREIT are globally respected real estate associations, with these experts in their respective fields, and have put together a REIT index for investors to consider. Number 3, enjoy tax transparency. Subject to certain conditions, REITs enjoy tax transparency, which in layman terms means that they do not need to pay tax on the rental income they collected after fulfilling the requirements. Investors are able to receive more dividends as a result, and this is another reason that makes REITs investing attractive. In 2018, the Singapore government extended the tax transparency treatment to Singapore-listed REIT ETFs as well, ensuring that dividends are not subject to taxation at the ETF level. NikkoAM has held tax transparency status since 1st July 2018, so investors of this ETF do not need to be concerned about taxation. Number 4, invest with CPF and SRS funds. There are only 6 ETFs approved under the CPF investment scheme, and NikkoAM Trading Asia x Japan REIT ETF is one of them. This reflects the strong qualities of the ETF. Investors who are interested to invest their CPF monies into REITs could conveniently invest in this ETF instead of picking the individual counters. It is important to note that you can only use your CPF ordinary account to invest in an ETF and not your CPF special account. Even so, you must have more than $20,000 in your CPF OA and can only invest up to the investable amount. It is best that you check your investable amount stated in your CPF account before making any investments. Number 5, dollar cost average with money investment plans. The good news extends to investors who prefer to employ dollar cost averaging, or DCA in short. DCA proves valuable in a market experiencing declines such as the current trend in REITs. Rather than attempting to predict the market bottom, one can opt for DCA, potentially buying more ETF units if prices continue to drop, thereby reducing the average buying price. For investors interested in the money investment plan, application can be made through DBS or POSB, FSM1 and Phillip Capital. So in conclusion, there you go. These are the 5 benefits that the NikkoAM Asia x Japan REIT ETF can offer to investors. Number 1, simplify your REIT investment, leave the selection to the index and allow the ETF manager to manage the portfolio for you. Second, reputable manager and index. NikkoAM Group has more than 60 years of track record and $219 billion US assets under management. The index is jointly created by FTSE, EPRA and NAREIT. These are reputable names in asset management and real estate industries. Number 3, enjoy tax transparency. Investors can take advantage of the tax transparency advantage offered to at the ETF level, leading to increased dividends compared to a tax ETF. Number 4, invest with CPF and SRS funds. This ETF is approved under the CPF IS. Investors can use both CPF and SRS funds to invest. And lastly, dollar cost average with money investment plans. Investors have the option to spread out the investment by consistently investing a small amount. Hopefully, now you have a better understanding of the NikkoAM Asia x Japan REIT ETF. Do like this video, subscribe to this channel, and I'll see you in the next one. Goodbye.